Dear students, in this changed scenario, we are stepping to the online classes. I welcome all the first PUC commerce students to the online classes. I am Mr. Jadiyappa S.P, lecturer in commerce, Government PU College, Shiralikoppa. I stand here to execute and deliver and explain the things regarding the subject accountancy, the chapter number 4, recording of transactions, volume 2nd. In the foregoing chapter number 3, you learnt that all the business transactions are first recorded in the journal and then they are posted to the ledger accounts. A small business may be followed this system, that is maintaining the journal and posting them into the ledger accounts. In case of big business enterprises, the volume of transactions or the transactions number is going to be increased, and these transactions are repetitive in nature, then it is somewhat cumbersome to maintain the journal and ledger accounts. It makes it convenient. We are going to study and the things special journals, or these special journals may be called as special purpose books. Before going to that main explanation, here I would like to recap the chapter first, Introduction to Accounting. There are basic terms used in accounting subject. The second basic term, transaction. Transaction means an event involving the value between the two persons or more persons, or between the two or more business entities. Here the value involves in the matter of payment to the creditors, purchase of goods, receipt of money, and incurring the expenses. The transactions may be cash transactions and credit transactions. In this topic, how these transactions are going to be recorded systematically, we are going to study that. Regarding the special journals or special purpose books can be classified into cash book, purchase book or purchase journal, purchase returns book. It may be alternatively called as a return outwards book, sales book or sales journal, sales returns book, and alternatively it is also called as a return inwards book and journal proper. Now we will have a look on the meaning, formats, and the preparation of the said journals. Amongst these, this cash book has been already explained by fellow colleague in the online classes. My part is that I am going to explain the rest of the special purpose books. First one is purchase book. The meaning of purchase book is that purchase book is a book in which only the credit transactions of purchase of goods are going to be recorded. I mean, the goods which have been purchased on the basis of the credit, we are going to record in the purchases book. Here, the purchase of assets are not going to be recorded. That purchase of assets is going to be recorded in another book that is called as journal proper. I will explain later on that. So, purchases book contains only the credit transactions, not cash transactions. Then after that, format of purchase book is like that. Draw two horizontal lines and divide the columns into 5 parts. First part is to be mention the date. Second part is going to be used to write the invoice number. And third column is to be used to represent the name of the supplier, and fourth column is to be used to write the ledger folio number, and last column is to be used to write the amount of purchases of goods on credit from the various parties. This is regarding a purchase book. Then purchases returns book or return outwards book. Purchases returns book is a book when the goods are returned by the parties. They are going to be recorded in this book. Why the goods are going to be returned? When the goods have been supplied by the supplier, if they are not in good quality, if they are not in a good manner, if they have been break up, if there are any weightage loss, then it is the matter we have to return the goods to the supplier. That is called as the purchases returns. In order to record the purchases return transactions, we have to open purchases return book. Again, draw the two horizontal lines. Then two horizontal lines can be classified into 5 columns. First column is going to be used to write the date, and second column is to be used to write the outward invoice number, name of the supplier in the third column, and fourth column is going to be used to write the ledger folio number, and last column is to be used to record the amount of the goods which have been returned to the supplier. This is regarding the purchases returns book. Next, how the transactions are going to be recorded in the purchase book. In the supplier when supplies the goods, the transactions are going to be recorded. While recording the credit transactions in the purchases book, first we have to go through the transaction clearly. The date of the transaction is to be entered. Next we have to write up the invoice number and from whom the goods have been supplied. I mean, the name of the supplier is going to be mentioned, and then we have to write the amount. While entering the amount, under this special purpose books, we come across the two types of discounts, trade discount and cash discount. If the trade discount or cash discount is allowed, that discount percentage of amount is to be deducted from the main amount, and the rest of the amount is going to be entered in the amount column. In this way, you have to prepare and present the purchases book or purchases journal. When the goods, due to the damage, due to not in good quality, have been returned to the supplier, then there we are going to prepare one important instrument that is called as a debit note. Debit note is a note which is prepared by the person against the supplier by giving the details of the goods which have been returned in a quantity, and the amount is going to be mentioned. This is the way we are going to record the purchases return book, the transactions of the goods which have been returned to the supplier. Then sales journal or sales book. Sales book is a book in which the credit transactions related to the goods sold on the basis of the credit, the transactions are going to be recorded in the sales book. The format of the sales book as the purchases book, again there you are going to follow the same thing, then date, invoice number, name of the supplier, amount. These things are going to be entered. When the goods have been sold, if the goods have not been in a good condition, then it is a customary to return the goods. Then those return of goods which have been sold by the persons or by the customers, those transactions are going to be recorded in the sales returns book in a systematic manner. Then journal proper means the transactions which are not at all recorded in the said 5 special purpose books those transactions are going to be recorded in a set of book. That book is called as journal proper. This is the thing about the meaning of the special purpose books: cash book, purchase journal book, purchases returns book, sales returns book, and journal proper. So after the preparation of the special subsidiary books, that is cash book, purchases book, sales book, purchases returns book, sales returns book. Now we are in the last type of subsidiary book, that is journal proper. Meaning of the journal proper book: journal proper book is a book maintained to record transactions which do not find place in special journals is known as journal proper or journal residual. Or in other words, transactions that cannot be recorded in any special journal or recorded in a journal is called journal proper. When the transactions will not getting the place in any special subsidiary books which have been already explained to you, those transactions are going to be recorded in journal proper. To record those transactions, this subsidiary book is going to be maintained by the business enterprises. When this book has been maintained, which are all the transactions are going to be recorded in this journal? That question rises. For that question, the following transactions are recorded in this journal are opening entries, adjusting entries, rectification entries, transfer entries, and other entries. These are the transactions are going to be recorded in the journal proper. Opening entries: when the accounting period start from April to 31st March, for the next April, the new books of accounts are going to be opened. Then, in that book, the opening entries are going to be made. I mean, the opening balances of assets and liabilities as well capital is going to be recorded. To enter the opening entries, this journal proper book is going to be utilized or used. Next one is adjusting entries. Update ledger accounts on accrual basis. Such entries are made at the end of the accounting period, such as outstanding salary, outstanding rent, prepaid insurance, depreciation, and commission received in advance. When finalizing the accounts, finally the adjustments entries are going to be made. Those entries which are going to be adjusted with the said items such as outstanding rent, depreciation and commission received, prepaid insurance, etc. These are the adjusting entries are to be made, and those adjusting entries are going to be recorded in journal proper. Next, third one is rectification entries. To rectify errors in recording transactions in the books of original entry and their posting to the ledger accounts, this journal is used. No doubt, The mistakes are going to be followed while doing the posting of entries to the ledger accounts. When such errors have been committed, such errors are going to be entered in the journal proper by rectifying them. For that purpose, the journal proper subsidiary book is going to be utilized. The next, fourth one is transfer entries. Here, when we are finalizing the books of accounts of the business enterprises, several accounts are going to be transferred. For example, drawings account is transferred to capital account at the end of the accounting year. In order to transfer such drawings to the capital account, this journal proper is used, or the transfer entry which has been made with the particular account, that transaction is going to be recorded in the journal proper. Finally, other entries. Here, other entries are going to be recorded, such as when the check is dishonored, or at the time of dishonor of check, for cancellation, for discount received and discount allowed, the entries are going to be passed. Purchase of sales of items other than goods on credit. Then goods withdrawn by the owner or proprietor for personal use. These are the things are going to be recorded under the head other entries in journal proper. To make all these types of adjustments at the end of the accounting period, this journal proper subsidiary book is going to be maintained by the business enterprises or business concerns. Next, I am going to explain regarding debit note and credit note. From the examination point of view, practical oriented question may be asked on the debit note or credit note by means of draft the specification of the debit note or credit note. Now we will take up debit note. What is debit note? When the goods are not in fine good condition, when the goods are damaged, under such circumstance, the goods are returned to the supplier. When goods are returned to the supplier, for every return, one document is to be prepared or one instrument is to be prepared, that is called as a debit note. A debit note is a note which is prepared by the seller for each return of goods. Individual debit note is going to be prepared. The debit note is prepared if the sum is to be recovered as well as when the goods have been returned to the supplier. To drop the debit note, we have to follow the specimen of debit note which has been already given in your text. Write up the title, specimen of debit note, and below that write the name of the firm along with the address of the firm. Mention the date on which the debit note is going to be drawn, and the debit note is serially numbered, and in description you have to write the supplier's name and challan number and the amount also. The amount should be mentioned in the words also. At last, signature of the manager supported for the debit note along with the date. In this way, we have to prepare the debit note. Debit note is a note which is prepared by the seller when goods are returned to the supplier. Next, another note one is going to be prepared, that is credit note. When this credit note is to be prepared, when the goods are returned to the buyer, then this credit note is going to be prepared. Only the difference between the debit note and credit note is that the former is prepared by the seller and the later is prepared by the buyer. When the goods will not in a good condition or have been damaged, under such circumstance, the customer returns goods to the business enterprises or a trader. Under such circumstance or on such situation, this note is going to be prepared. When the goods are returned, then the credit note is going to be prepared. How the credit note is going to be prepared? In order to prepare the credit note, specimen has been given. We have to follow the specimen which has been written down on this board. First, write up the title, credit note, and you enter the name of the firm along with the address. Mention the date on which date the credit note is going to be prepared, which has been serially numbered. Then write up the customer's name who has returned the goods along with the challan number. Write the amount of goods which have been returned, and the amount should be specified in the words also. Finally, that credit note is signed by the manager or proprietor along with the date. This is the specimen of credit note you have to follow.